Did you know the biggest disadvantage you have as a retail trader isn't your account size but your freedom? If you walk onto the trading floor of a multi-billion-dollar institutional hedge fund, freedom does not exist. If a trader tries to risk 10% of the firm's capital on a single trade to make it back, his order doesn't just bounce. It is instantly rejected by a master server. If that same trader hits his maximum daily loss limit, his trading desk is disabled, and for the rest of the day, he cannot open another position, even if he sees the perfect setup forming right in front of him. The choice to ruin himself is forcefully taken away. But you at home, sitting in your bedroom at 2 in the morning, you have absolute, unrestricted freedom. When a trade goes violently against you, you have the freedom to drag your stop loss down to increase your predefined loss on the trade. The freedom to leverage your entire life savings to the absolute limit on a single emotional impulse. And that freedom is a financial death sentence. For decades, the retail trading industry has sold us a lie. They told us that if we just read enough psychology books, if we just meditated enough, we could build the willpower to master our emotions. But relying on willpower when your hard-earned money is on the line is exactly why 90% of retail traders fail. Your biology is hardwired to make you lose. And today, I am going to show you that the art of making risk look effortless has absolutely nothing to do with fighting human nature. It's about building a digital environment that physically stops you from making a choice. But to understand how this hidden architecture actually works, you first need to see exactly what happens to your brain when you are left entirely to your own devices. You are trading, and a long red candle flashes and your $3,000 profit vanishes. An entire trading account, representing 6 months of saving, is liquidated in under 60 seconds. Before we can talk about the ultimate solution, we need to understand how this man arrived at this exact, devastating moment. His name was Julian, and the most tragic part about Julian's story is that he wasn't lacking a trading edge. Intellectually, Julian was a master. However, financially, Julian was bleeding to death. To understand why, we have to rewind to 3 hours earlier. It was a normal Tuesday morning. Julian was perfectly calm. The New York session had just opened. He was scanning the charts when he saw it. The A+ setup. The exact geometric pattern he had studied 1,000 times. Usually, Julian followed his strict rule. Risk exactly 1% of his account. But this setup looked too perfect. It looked like a sure thing. This is the exact moment the invisible villain steps into the room. The logical part of Julian's brain, the prefrontal cortex, whispered, "Stick to the plan. Use the normal lot size." But Julian's amygdala, the primitive, emotional center of the brain, was already hijacking his nervous system. Anticipatory dopamine was flooding his bloodstream. He had 2 possibilities in front of him: follow his boring, strict risk plan, or leverage his account to the absolute limit for a massive, life-changing payout. Given absolute freedom, we all know what human biology chooses. Julian's hand moved almost on its own. He deleted his normal lot size, typed in a massive one, and clicked buy. Some time later, the market exploded in his direction. Green candles stacked one after another, slicing through resistance levels. In 15 minutes, Julian was up $3,000. He had hit his daily profit target. His written plan dictated that he close the positions, shut the laptop, and walk away a winner. But in the world of trading, every massive success creates a brand new, deadlier problem. Julian stared at the screen. His heart was pounding against his ribs. Euphoria is a drug far more dangerous than fear. Why stop now? He thought. The momentum is insane. This is a runner. If I hold this, I can double my account today. He reached for the mouse and canceled his take-profit order. He expected the trend to continue to the moon. Reality, however, has no respect for a trader's expectations. 2 minutes later, the trend completely stalled. The volume dried up, and then it reversed, violently. Because Julian's lot size was so massive, the pullback didn't act like a normal dip. It acted like a chainsaw. He watched his $3,000 profit drop to $2,000, then $1,000, then 0. He should have closed it at break-even, but a psychological phenomenon known as loss aversion paralyzed him. The brain feels the pain of losing twice as intensely as the joy of winning. Admitting he gave back $3,000 was too painful for his ego to accept. So he went from extreme, euphoric greed to sheer, blind panic. He held the trade as it went negative, praying for a bounce, sweating, bargaining with the market, staring at the screen. But the market has no mercy. Margin call. Julian had just turned a massive, perfectly executed winning trade into a completely blown account. He learned a terrifying, humiliating lesson that morning. Knowing the rules means absolutely nothing if your environment gives you the freedom to break them. He was broken. He searched desperately for an answer online. He looked for new strategies, new psychology coaches. He found none of those. Instead, he found Arthur. Arthur wasn't a YouTube guru. He didn't rent Lamborghinis or post screenshots of his winning trades. He was a quiet, unassuming man in his 60s who used to manage quantitative risk for a Wall Street firm. Julian tracked him down to a local diner and begged for 15 minutes of his time. Sitting across the table, Julian confessed everything: the over-leveraging, the greed, the paralysis, the blown account. "My psychology is weak," Julian said. "I need to learn how to fight my emotions when the adrenaline hits. I need to build better discipline." Arthur slowly put down his newspaper. He looked at Julian with a mixture of pity and understanding. "You're fighting human biology, Julian, and you will never, ever win that fight." Julian frowned. "But the professionals do it. They have ice in their veins." "That is the greatest lie retail traders believe," Arthur replied. "People who make risk management look effortless aren't doing anything special with their minds. They are not monks. They feel the exact same greed and fear that you do." Arthur leaned across the table. "Do you really think institutions trust a 25-year-old trader with $50 million and just give him a sticky note that says, 'Don't get greedy'?" Julian stayed silent. "Retail traders fail because you are attempting the impossible," Arthur explained. "You are trying to act as both the trader and the risk manager at the exact same time. At 7 a.m., your internal risk manager writes a beautiful plan, but at 9:30 a.m., when the market is moving and the adrenaline spikes, your internal risk manager goes blind. The trader takes over, and the trader is a degenerate gambler." Arthur reached into his pocket and slid a small silver flash drive across the table. Institutions know that human willpower is a battery that drains under pressure, so they don't rely on it. They use algorithmic guardrails. If a Wall Street trader hits his daily profit target, the system auto-liquidates his positions and locks his terminal. He cannot give the money back to the market, even if he screams at his screens. Julian stared at the flash drive. "You don't need more meditation, Julian. You don't need another psychology book. You need to fire yourself as risk manager. You are going to digitize your discipline using a tool called Alpha Equity Manager." Julian went home, his mind racing. He sat down at his desk. He didn't open his charting software. He installed Alpha Equity Manager. It didn't look like normal trading software. There were no flashy charts, no moving averages, no colorful buy and sell signals. It looked like the control panel of a digital bank vault. Arthur's instructions echoed in his mind. You cannot be rational when the market is open. You must build your cage before the beast wakes up. They called this concept the window of logic. Every single morning, Julian was given exactly 1 hour, 60 minutes before the New York session opened. During this hour, his heart rate was at a resting pace. His cortisol levels were low. He wasn't staring at fluctuating numbers. For 60 minutes, he was allowed to think like a cold, calculating risk manager. Julian opened the input dashboard of Alpha Equity Manager. Next, he moved to the daily profit target. He remembered the toxic euphoria of being up $3,000, only to watch it bleed to zero because his ego demanded more. He typed in a reasonable, calculated daily target. Finally, he set his daily drawdown limit. the absolute maximum amount of capital he was legally allowed to lose in a single day before the software cut him off. He looked at the countdown timer at the top of the screen. The window of logic was closing. Julian's hand hovered over the keyboard. A sudden wave of anxiety hit him. The realization of what he was doing. He was voluntarily giving up his freedom. He was handing over the keys to his own account. Julian quickly clicked on the max lot size box, trying to change it back to a higher number just to test it. The box was grayed out. He tried to delete the profit target. He couldn't even highlight the numbers. The parameters were locked, and they would not unlock, under any circumstances, until the exact same time tomorrow. Julian slowly leaned back in his chair. He expected to feel trapped. Instead, for the first time in his entire trading career, he felt a profound, overwhelming sense of relief. The exhausting, soul-crushing weight of constantly policing his own behavior was gone. He didn't have to worry about whether he had enough willpower today. He didn't have to wonder if he would sabotage himself. Alpha Equity Manager was now standing guard over his capital like an invisible bouncer. Julian thought his problems were finally solved. He thought he was untouchable. However, he was about to learn that human nature does not surrender its freedom that easily. A cage is only as strong as its bars, and when the market opened the next day, Julian's inner gambler would wake up, desperately looking for a loophole to break out. And he would find one. A few days after installing the software, the market environment shifted. The clean, trending setups disappeared. The market turned choppy, erratic, and utterly unpredictable. This is the exact environment where retail accounts go to die. Julian took his first trade. It immediately chopped around and hit his stop loss. He took a deep breath, recalibrated, and took a second trade. It also hit his stop loss. He was now dangerously close to his predefined daily loss limit. Psychologists call what happened next an extinction burst. It's the moment a human being realizes they are losing control, and their brain frantically ramps up its worst behaviors to try and force a victory. Frustration began to boil. The familiar, toxic heat crept up the back of his neck. His vision literally narrowed, a biological symptom of the fight-or-flight response. "I just need one good push," his ego whispered. "I'm a good trader. The market is just manipulating the price. If I catch this next reversal, I'm back to break even." He found a mediocre setup. He didn't care. He entered his third trade. Almost immediately, a massive red candle printed on the screen. The price dropped, crashing right through his stop-loss line. Before Julian could even react, the screen flashed. A stark, red notification popped up. Daily loss limit reached. Instantly, his open positions vanished from the chart. Alpha Equity Manager had auto-closed the trade. Julian instinctively moved his mouse to the New Order button. He was going to buy the dip. He was going to average down. His terminal was completely locked. Julian's blood ran hot. The tilt had fully arrived. His ego was screaming inside his head. "The market is bouncing right now. Look at the wick. If I buy this, I can make it all back in one swing. Unlock the damn screen." He stared at his locked computer, breathing heavily. He felt like a caged animal. And then, his eyes darted to the side of his desk. He remembered a hidden detail, a loophole. Alpha Equity Manager was installed on his desktop computer, but his mobile phone, sitting right next to his keyboard, had the broker's app installed. It was a direct, unfiltered line to the market. If he placed the trade on his phone, he could bypass the desktop lock entirely. The invisible villain, his own biology, took the wheel. His hands were literally shaking as he grabbed his phone. He didn't calculate risk. He didn't care about his 1% rule. He didn't care about the window of logic. He typed in a massive, account-risking lot size. It was a pure, unadulterated revenge trade. He stared at the blue buy button. He was about to outsmart the machine. He pressed it. A blue line appeared on his phone screen. Order executed. Julian exhaled, a sick sense of triumph washing over him. But less than a second later, before the chart could even register the new position, the blue line vanished. Order closed. Julian blinked. He frowned, confused. He quickly typed in the massive lot size again and hit sell. Order executed. Order closed. It happened in milliseconds. It was so fast it felt like a glitch. Julian dropped his phone onto the desk. He stared at the blank screen, his heart pounding in the quiet room, and slowly, the terrifying, brilliant truth washed over him. Alpha Equity Manager wasn't just locking his mouse on his computer. It was monitoring his account at the broker's server level. The exact second Julian tried to bypass the rules, the exact millisecond he tried to use his freedom to destroy himself, the software recognized the unauthorized action and sniped the trade dead. It was a millisecond slap to the face, a cold, emotionless machine aggressively denying a frantic, emotional human. Julian was completely locked out. He couldn't revenge trade, he couldn't over-leverage, he couldn't destroy his account. He was left with only one option, to sit in silence and feel the agonizing pain of a losing day. He was forced to endure the loss. He sat there for 20 minutes. And a strange thing happened. Because he couldn't act on his anger, the anger eventually burned out. The cortisol faded. His heart rate slowed down. By the time he went to sleep that night, Julian checked his account balance. He had taken a loss, yes, but his account was still alive. He had capital to trade tomorrow. He had survived his worst day. But as every veteran trader knows, surviving a losing streak is only half the battle. Surviving a winning streak is when the real test begins. 2 weeks had passed since the millisecond slap. Julian was executing his plan flawlessly. And then, the market threw 2 massive psychological hurdles his way in the same week. First was the external threat, the news. It was Wednesday. CPI data was about to drop. The anticipation in the market was thick. At exactly 8:30, the numbers hit the wire. The market exploded. A massive green candle shot up the screen, breaking market structure and tearing through major resistance levels. Julian's fear of missing out, his FOMO, screamed at him. "Buy it now! Catch the spike before it's too late!" He aggressively clicked the buy button. Action denied. He frowned. He clicked it again. Action denied. Julian exhaled, suddenly remembering the parameters he had set during his window of logic that morning. He had enabled Alpha Equity Manager's news filter. For 15 minutes before and after any high-impact news event, the software created a digital force field around his account. It physically prevented him from gambling on the volatility. Unable to trade, Julian simply watched. 2 minutes later, the massive green candle stalled. The algorithm swept the liquidity, and the market violently crashed in the opposite direction. It created a massive wick that undoubtedly margin called thousands of retail traders who had chased the green candle. Julian leaned back in his chair, safe on the sidelines. The machine had saved him from FOMO, but the ultimate boss fight happened 3 days later. Julian caught a genuine, high-probability setup. He entered the market. The trade moved flawlessly in his direction. There was no chop, just clean, upward momentum. He was up $1,000, then $2,000. Finally, his open profit hit $3,000. He had reached his daily profit target. This was the exact same scenario from Chapter 1, the exact moment he had blown his account months ago. And right on cue, his biology reacted the exact same way. Dopamine flooded his brain. The euphoria whispered in his ear. Look at this momentum. Why stop now? This is a runner. This is the trade that makes your entire year. Julian reached for his mouse. He moved the cursor to his take profit order. He was going to cancel it. He was going to make the exact same mistake that had nearly ended his career. But before his finger could even click the mouse, the screen flashed bright green. Daily profit target reached. Instantly, his open positions vanished. Alpha Equity Manager had auto-closed the trades. His terminal was hard-locked. Julian sat there, his hand still hovering over the mouse. He felt a sudden, intense pang of annoyance. He was angry at the software. He wanted to keep trading. He was in the zone. He was a genius. But 10 minutes later, the market trend stalled, reversed, and dumped heavily. Julian watched the chart fall apart in stunned silence. If the software hadn't intervened, his greed would have kept him in the trade. He would have watched his $3,000 profit turn into $2,000, then $1,000, and just like before, he would have panicked and held it until it turned into a massive loss. But this time, his account balance sat securely at plus $3,000. He didn't have to muster the willpower to walk away. He didn't have to meditate to control his greed. The machine didn't care about momentum. It didn't feel euphoria. It only knew the math. He was forced to end the day a winner. Months passed. Julian's equity curve didn't look like a chaotic retail roller coaster anymore. It looked like an institutional staircase, a steady, boring upward spiral. He didn't sweat during trades anymore. He didn't yell at his monitors. He didn't spend his evenings reading psychology books trying to fix his broken mindset. If someone had been standing behind him on a Tuesday morning, watching him take a loss, they would have seen him simply close the laptop and go make a sandwich. They would have thought, "Wow, that looks so easy. That guy has ice in his veins." Julian would have chuckled inwardly. Ice? He was still the exact same human being. He still felt the burning urge to revenge trade. He still felt the intoxicating greed when a position was deep in profit. He still felt the paralyzing fear when the market turned against him. The difference was that his fear and his greed no longer had a weapon. He didn't conquer his emotions. He simply placed them inside a cage where they couldn't touch his money. On the outside, his execution looked extraordinary, but on the inside, it was just architecture. That is the art, the invisible guardrails that make the visible execution look completely effortless. This brings us to the final, uncomfortable truth about your own trading. Let's remember the lessons from Julian's story. First, the willpower myth. You do not have infinite discipline. Under financial threat, your logical brain shuts down, and your survival brain takes over. Relying on your willpower to respect a stop-loss is a game you will eventually, inevitably lose. Second, the institutional reality. Professionals do not trust their own psychology. They use risk managers and hard-coded systems that physically prevent them from breaking their rules. Third, the window of logic. The only time you should be allowed to set your risk parameters is when you are completely flat, resting, before the market even opens. And finally, the digital guardrails. Whether it's auto-closing your trades when you hit your daily loss limit, sniping a mobile revenge trade in milliseconds, blocking you from news FOMO, or forcing you to take your profits, outsourcing your discipline to a software is the ultimate trading hack. The art of making risk management look easy isn't a genetic gift. It's the mark of a trader who fired themselves as the risk manager and hired a machine to do the job. People will look at your charts one day and say, "You trade like a robot," and you'll smile because they don't know the truth. You don't trade like a robot. You just finally stopped letting a human touch the buttons. So I ask you, are you still trying to fight human nature? If you are still moving your stop losses, if you are still over-leveraging to make back a loss, if you are still giving back your profits because you just can't walk away from the screen, it is time to stop relying on sticky notes. It is time to digitize your discipline. Click the link in the description below to install Alpha Equity Manager. Lock your lot sizes, secure your capital, and let the machine do the heavy lifting that human psychology simply cannot do. If you made it this far, comment below with the biggest mistake your human psychology cost you this month. If you're not already subscribed, subscribe to the channel and turn on notifications. Leave a like and click the hype button. Stop fighting yourself. Build the system. And I will leave you with this one final thought you won't be able to stop thinking about. Are you failing because you're a bad trader? Or are you failing because you're a human trying to do a machine's job? See you in the next video.